Morning, everybody. Welcome back to another episode of Compound Chronicles. Today, we are going to go over the end of month tally for January, see what the portfolio has done, see how much we've made, didn't make, and kind of go over just a slideshow that I created after we take a look at the actual M1 portfolio itself. So, taking a look real quick, we're going to jump through a lot of this in the actual slideshow itself. But this is where we are at for the whole period starting on October 31st, 2025 through today. And then it's kind of just looking at the year to date. We were up 4.14%. So what we're going to do right now, jump into the spreadsheet and also the slideshow and take a look at what we have. Here we are at January 30th, 2026. That is the last trading day of the month. You can see this is month three of the total journey to 100,000. Once we hit 100,000, this journey is not over. We're going to look for 200,000. And here we are. We're going to take a look at the numbers at a glance. The portfolio currently is just under 55,900 at $55,872.90. We are up since October 31st, 2025, 4.2%, and we've been at this for 93 days as of yesterday, October 31st. And we have almost 3x what the S&P 500 has done in that same time. So we'll take a look at that. Our rolling numbers, if we keep what we're at right now for the last 3 months, we're looking to make about 18% for the year, and our Sharp ratio is 1.78, which is pretty good. This data is very limited. 3 months is not a huge trend, but it's something to take a look at, and then we're going to move forward. As we get more data, these numbers will populate different Sharps, different max drawdowns, and different running 18%, which I think we're going to get this up a little bit, but we'll see. Just zooming in right here on the actual screenshot I took. This is kind of what you seen with the M1 moments ago. But you kind of see from the 31st of October, we started at $44,919.37. Total gains was $2,236.70. And we have deposits of almost $9,000, which we're going to get into here shortly. So let's go to the next screen and we will see what it brings us. The margin story. So this is the kind of the big headline. This is why I'm doing most of these videos. For one, this is for educational purposes only. This is not financial advice. I am not a financial advisor, but I am using light margin up to about 10%, is kind of where my threshold is before I stop using margin and kind of let it ride. But we are up since starting this in October, $17.49 of net profit, and we only have paid so far $1.01. Kind of zooming in on this screenshot that I took from M1 Finance borrow section, you can see it doesn't have a date up here, but this was as of yesterday, the 31st. We have $550 of margin loan balance at 4.15%, which actually this drops if the market continues to drop. But you can kind of see our withdrawal. We can withdraw up to 20,332. We can invest up to the same amount. But we were at 98%, of margin health, which is good. We're only using about 2.5% of our margin. And you can see, I've been just taking out these $50 withdrawals and putting them into the trading account. And right down here, you can see our January interest accrued $1.57 projected January. So we're going to pay right around on February 4th $1.64 for what we have, our loan we have had out right now. So not too much. So you times this $1.64, then you add it to our $1.01. We're going to be at $2.65 so far total. And if we had not made another dollar on that margin, we made almost $18 on that amount. So pretty good stuff. And that equates to a whopping return on investment of 1,731%. So pretty good. I do not expect this trend to continue. I don't think we're going to have these 4% months like we have had, but who knows? We'll take a look at it again next month and see what these numbers look like then. But right now, we've had $550 borrowed. We've only paid $1.01 in interest, and right around $17.50 we've made on that $550 and that just $1.01 interest we've paid so far. So pretty good stuff. So we've made significant progress in our growth to 100,000, and some of that came from market gains, but a lot of it came from deposits, margin deployment, and everything like that. So I kind of want to go over that. What most people will not tell you, they'll show you that they started 45,000, they grew it to 55,000 in 3 months. But realistically, right now, I've been kind of moving some portfolios into this and kind of slimming down what I'm doing elsewhere. And most of the gain so far, and this is just me being totally open, because again, this is for nothing besides just me making a kind of a log. Total gains $10,953, but a lot of that came from cash deposits. You can see right here, $8,161.79 is from deposits. Margin deployed, as you've seen in the slide before, $550. But we did grow, 20% of that 10,000 in market growth, so not too bad. on that money that we started with, that original 45,000, we made about $2,250 on it. So pretty good stuff. Deposits are 3.9x larger than market gains right now, and that's exactly what should happen in month three. I'm kind of accumulating some funds, breaking down some other accounts, putting them all into this one, and we're going to start growing. But from here on out, I might have some significant deposits down the road, but we should just be looking at my weekly deposits of about $250, $270 a week, and then with about a $50 deposit in margin every week until we get to that 10%, then I'll slow the margin roll down. But this is kind of where we're at on that 10,000, almost $11,000 gain that we have in the portfolio. A lot of it did come from cash deposits. A decent amount came from market growth, but eventually our deposits are going to look minuscule compared to what the market's growth is going to be once this portfolio hits 100,000, 200,000, so on and so forth. So right now, it does look like our cash deposits are killing it, and they are. We've been putting a solid, trend of cash in, but that's going to slow down. Again, we're going to get down to about $300 a week, give or take, and then a $50 margin deployed. And then most of our gains, after part of year one, are going to come from our market growth. So this week I got a comment in one of my videos asking why do I not chase the miners and or AI stocks, as he was up 18% for the year and 5% was pretty horrid in his book. And I didn't really waste my time going to commenting and getting into a war for no reason because I'm too old for that. I really don't feel like battling comments. So if you have anything negative, maybe just hold them to yourself. If you have something constructive, please leave it down below. But yeah, this comment came before the 10.3% one-day move in gold, which is still up pretty solid. So you can see the peak was around $5,520 on January 30th. It dropped down to 49.53, which is about a 10.3% negative pullback in just one day. If you put 100,000, $1 million in something like this, and sure, you can say you're bragging, you're up 18% for the first 3 weeks of the month, then you lose a 10.3% haircut. I'll be kind of sweating what Monday's going to bring, trying to withdraw my money, move my money around, and make changes. So my portfolio is very diversified. The one portfolio you'll see has about a 33% allocation, which is Dolly, but that is only about a 15 to 20% total allocation in the entire Chronicles portfolio. So while I am kind of heavy in gold, it is only 33% of a 15% overall portfolio. Titan does hold a little bit, but not nearly the 33% that Dolly has. So I do have exposure to gold, but it's at a smaller allocation. Would I want to be 100% in AI or even 50% in AI, 50% in gold? I don't think so. I wouldn't be able to sleep at night, especially after seeing Friday's 10% drop. What is Monday going to bring? Who knows? It can skyrocket back up. It could hold where it's at. It can continue the trend up. But my bet is it might trend down a little bit before it goes up. And me knowing I'm into one or two assets would just have me up all night. So that's why I don't chase the 18% gains like somebody said. Why don't I sell everything and go into something where I can make more money? If I can make 1, 2% a month, I'm happy, especially if I'm using margin. I do not want to use margin like I'm doing even at a lower rate, 10% scale like I'm using margin for, and get into some of these sectors or allocations where I'm so concentrated in something like gold that if gold retraces, which it's going to. It might not be this week, month, year, but eventually it cannot keep trending like it's doing. We're going to get a pullback. It's going to last a little bit, and I do not want to have 100,000, $1 million portfolio sitting in just one or two assets. So if you're going to make a comment saying why am I making videos only making 5% for the first 3 weeks? My comment to you is, why wouldn't I? Why would I want to get in something where I'm up 18%, but I can take a 10% smash in one day? My worst day was about 3 or 4% this month, which is still pretty significant, but not too bad when I'm up, almost 4.2% for the month. So this month, we are going to rebalance Dolly. Dolly is one of our dual momentum strategies. Sometimes we get a new allocation. Sometimes we get a refresh on what we have, and it's going to require a rebalance. So take a look at a screenshot I took. You can see with M1 Finance, I can do this in 2 clicks. I simply go down to this rebalance button here. It says, would you like to rebalance your portfolio? I hit yes. Had I had a different allocation, I would have to go to edit, add what I wanted, subtract what I didn't want, and did a rebalance that way. But this month, Dolly is keeping the same allocation, which is QLD, GLD, or I use IAUM, which is a gold, cheaper expense ratio gold fund. along with DBC, a commodity fund. So that is my three allocations in Dolly. It is up 8% for the year, as you can see right here, 8%. We're up about $400 on that $8,700, which again, I'm slowly building this Dolly out to about 20% of the overall allocation. But we're doing pretty good. Do I expect this? Again, this is pretty heavy in gold. Do I expect gold to keep going up 12, 13% every month? I doubt. But as a momentum trader with this portfolio right here, we're going to ride a momentum and see what it brings us. But taking a look over here, 8% Dolly for January. Titans up 3.71%. No slouch. I'll be very happy making 3.71% every day on a buy and hold portfolio. We've done that, but again, I expect to make 1, 2% on this. But we'll take these 4%. Some days we'll take these 8% because some of these months are going to be down. So we can take them when we can, and then they're going to average out to be about 20% annually after it's all said and done, if history repeats itself. If you want to take a look at those back tests, I showed them in other videos, kind of what we're running with Dolly and Titan. Take a look at it, see what we have, and kind of see what the portfolio is built around. So February's allocation in Dolly, QLD 40%, GLD 33.3%, DBC coming in at the low end, which again, this portfolio can hold up to 5 asset classes at one time. Right now, we're only signaled into these three. But the big hitter is QLD, which is a 2x leverage NASDAQ. Gold at 33.3%, and again, commodities at 26.7%. Every month, these can change. This is the first time in the last 4 months that we've kept the same allocation. I'm not going to give these updates because I don't want people to trend follow what I'm putting out here, but this is the allocation for Dolly. If you want to follow along from the last 2 months, I've been making content. Good. How does Dolly pick these assets? A systematic momentum signal back tested since 2012, and it's been producing about 20% annually. Actually, last year was up about 45.5%. So pretty strong stuff. And the best thing about it, minimum drawdown. So on a month-to-month basis, Portfolio Visualizer, along with other people that I know that have been running this, I've only had about a 10% max drawdown month to month, and that's pretty superb in my book for a relatively passive investment strategy. Currently, our margin traffic light is set to green. We're only using about 2.73%. And right now we're continuing our action, which is about $265 a week. $50 of that is going to be also tacked on there, so making about 315 weekly deposit into the Chronicle portfolio, right around $56,000 currently sitting at. So we got the green light. So between 0 and 10% of this margin used, we're going to keep throttling in with the margin. The buffer two margin call, 98.7%. Days until yellow. So I put a little formula in there that's going to populate as more time goes on. Days until yellow, which means with our average deposits, which are very strong right now, we should not see a yellow light until about 1,114 days, so a few years from now. I have a feeling this number is going to come way down once it starts averaging in my $265 deposits plus $50 margin deposits as well. But for right now, it's saying about 1,100 days before we get into this yellow, unless we get a significant pullback, or it starts averaging in my deposits that we're making slowly, more slow than what we have been. Green zone capacity used. So, of that 10%, we've used about 27.3%. So we're still in the safety and comforts of our green zone. We're going to continue to keep playing this until we hit around 10%. Then we're going to slow roll, make our future deposits just into our Chronicles portfolio and not use any margin until we get back into the green. So to follow this, again, we have this all kind of mapped out in prior videos. Me versus SPY, using just the data that I have compiled in the spreadsheet. Actually, its 12-month CAGR is of the S&P 500 actual returns the last 12 months. My 12-month CAGR is using the 3 months that I have logged so far in the spreadsheet. So we're showing about an 18% annual return right now using the past months that we have. So it's kind of forward looking at what we're going to be making, about 18%. Again, we've had a pretty slow November, December. I think I was up in November, down in December, and then we had a crazy nice 4.2% or 4.14% this month. You can see January 4.14%. The SP 500 was only up 1.47, and then again total we're at 4.2% in the SP 500 in that same time frame of October 31st to 2025 is up 1.45%. So pretty strong stuff. Kind of look at the portfolio visualizer back this of Dolly. I kind of wanted to show this right here of 2025. You can see we're up 45.51. This here is not taking in consideration, the prior 12 months that we've had in this dual momentum, which is 20% of the overall portfolio. But had our spreadsheet been in there for all of January or from January to December of 2025, this number would be much higher. But again, I don't want to, I'd rather see lower numbers and be happily surprised with having higher numbers than starting up high and having to have this number keep dropping down as time goes. So this is close to what we expect, about 20% annually between Titan and Dolly. And we're kind of right on track with that. So let's keep it going. But you can see we have a 2.75% alpha on the S&P 500. Again, we are up 4.2%. It is up 1.45%. And that is some pretty serious alpha on the S&P 500. But again, 3 months do not make a trend. We'll see what we can do moving forward from there. Doing the S&P 500 by about 3x. On our win rate versus the S&P 500, since the S&P 500 did not drop as much as we did last December, we have a 66.67. So out of the 3 months, we won two, lost one. Pretty good numbers. And again, it wasn't anything super drastic. The max drawdown on S&P 500 was 0.22%. Our max drawdown in December was 1.35% month over month. November was green. December pulled SPY down. Like I just told you, my 1.35% is still tiny in the grand scheme. Journey to 100,000. So I'm also tracking kind of, it's simple math now. We're up 55,870. We are 55.87% towards my $100,000 initial goal. Current value is, like I said, 55,900. Remaining, we have $44,127 to make up. Right now, with our strong deposits and our, almost $2,300 or so in market gains, it's projecting us with the minimal 3 month that we should hit our 100,000 goal by September 30th, 2026, and that is about 241 days away. Do I expect to hit this goal? I don't think so because I'm not going to be making the drastic $10,000 deposits within the last 3 months like we've been doing. So, I look to get about another let's just say $15,000 in deposits for the rest of the year. So that itself, puts us pretty close, but we're gonna have to have some outsized gains to hit this. Again, as time goes, my formula will populate our new weekly deposits, monthly deposits, our margin increases, and I think this number is going to be put into 2027 because I do not think we are going to make a 44% gain from here till December, or I should say September 30th. So again, these are all kind of rough numbers right now. These are all actual numbers if we keep depositing like we have, if we keep making the money like we have. But right now, our projected date to hit our goal of $100,000 is September 30th. Stay tuned to see what we are going to actually do. Journey to 100,000. We are 55.87% on our way to 100,000. We have about $44,127 to hit our goal of 100,000. And right now, with our strong deposits, our strong growth, it's saying we should be there right around September 30th, 2026, which is about 241 days away. This is taking in consideration our sizable deposits that I've been making, which are not going to be like that moving forward. It's also taking into consideration our 4.14% month we had in January. But then again, we did have a little bit of slow start in November, December, which it takes into consideration. But right now, if we keep what we've been doing, we should hit our $100,000 goal by September 30th, 2026. But again, I think I'd say if I deposit 15,000 from now till September, I'd be pretty surprised. I don't see market gains making up that gap, but right now, with what we've been doing, with how we've been performing, this is what my spreadsheet is populating. A date right around here, 241 days away. So at a 17.89% rolling CAGR, $265 a week, plus our $50 deposits and margin, we are way ahead of a schedule. Month three was the best month since inception, 4.14% time weighted return. Best month, 4.14. Worst month, 1.33%. So pretty strong stuff from these portfolios. Again, this is just to kind of keep us some sort of schedule. Again, I think its schedule is going to be pushed back into 2027, but we shall see as time goes. What's next? Behind the spreadsheet. How I track every dollar, the weekly workflow, the formulas that matter. This is going to be a video I'm going to make. Dolly deep dive. I don't know exactly what I'm going to show. I'll part show up the spreadsheet a little bit, show you how it might populate some of the formulas. Again, this is not me showing you how to trade, invest. Again, this is not trading advice. It's for educational purposes, but I kind of just want to show you how I'm pulling some of the data, and then a month 4 update, which will come at the end of February. Show you where we're at. Compound Chronicles, building wealth one systematic decision at a time. And then once again, please subscribe to the journey. It's been a slow start, but that's fine. I've done other YouTube content before. I know kind of starting out, it's going to be a little bit slow. But if you got any kind of knowledge out of this, any kind of something you might want to follow, intrigued by, just throw a share out there. Follow, like, subscribe. That'll all help boost kind of the algorithms and get me moving here. Um, Disclaimer, I already talked about this a couple times. This is content is for educational and entertainment purposes only. I am not a licensed financial advisor, and nothing in this video should be considered personalized financial, tax, or investment advice. All investing involves risk, including the possible loss of principal, past performance, whether real or back tested does not guarantee future results. Margin trading amplifies both gains and losses. I may hold positions in securities mentioned in this video. My results are not typical and should not be used as a benchmark for your own portfolio. So with that, that concludes our video. So with that, that concludes our video, and I hope you look forward to the next one that I create. You have a good day, and I will see you next week.